Hey everyone, welcome to the Ankerstar Wealth Market Update. Got three exciting topics for you today, and what we're going to talk about is, how are those New Year's goals going? Right, we're starting welcome to March. 2 months into the year, Mike's going to kick us off by talking about some fitness stuff because that's largely, one of the goals that most of us have for each year. And talk about fitness-related stocks, and then even the other side of that coin, right? What are some anti-fitness stocks? And what comes to mind when you think anti-fitness? I think Taco Bell. I know lifetime I've consumed probably 100x more Taco Bell than I probably should have. I'm off of that now, but we're going to talk about fitness and anti-fitness stocks, and then I'm going to end with what do you do when the market's hitting on all-time highs? Mike says celebrate. I say slap high fives. Mike says also, that's when you can actually start checking your accounts again because almost everything's in the green at that point. But that's what we're going to talk about for closing today. Before we begin, this is a financial education presentation, so make sure you do your own due diligence before acting upon anything you hear in this presentation. And more disclosure information is available at ankerstarwealth.com. So with that, Mike, over to you. Let's talk some fitness stocks.
All right. Steve, before I share my screen, I just want to say that yesterday with our Bitcoin conversation, and I had my toughest decision yesterday with Bitcoin. I had to decide to pull the trigger, and you say buy, sell, whatever. No, it was to buy my Bitcoin t-shirt, and I had to decide, do I get a large or an extra large shirt? Where are my fitness goals going? Am I going to go towards extra large or towards large? Because I'm right on that threshold. So I thought today's topic, 2 months into the year, it's time to consider resolutions. And one of the things a lot of people do is they join that gym. So let's look at some gym type stocks. So we're going to start off with Planet Fitness. And on your screen, you can see Planet Fitness. And if you joined the gym and you bought the stock going into January, you made a little money, but you should have sold. Because it is Planet Fitness is on the decline. I'm not saying that people are quitting the gym, and I'm sure that that wouldn't affect it that much, but definitely on the decline so far. I mean, overall, Planet Fitness, when you look at a 5-year graph, is pretty consistent. I mean, it has its ups and downs, but it's not growing like those tech stocks, and it's certainly not growing like Bitcoin. So another one that would be considered what I consider a fitness stock, and this one is kind of brutal, is Peloton.
Oof.
And what I'm showing you here is the 5-year chart on Peloton. So if you bought that Peloton in the COVID year, and you said, I'm going to put my money, whatever I put in Peloton, I'm going to buy the stock too. That time it was not a good decision as it peaked at $150 and now it trades at $4.67. Although it's up 3% today. So Peloton declined substantially. Obviously nice machines, but their premise of selling software to make the money has not worked out great. And then another one of my favorite, although I've only participated in this I think once, is Weight Watchers. And this one, if you look at the graph and you see this surge, let me look at the all-time surge. You see this spike in 2018. This was when I participated in the program. No, not at all. It was when Oprah decided to join the company and buy a 10% share and get on the board of directors, and it spiked up, hit $100 a share. Now it's at $3.38. And I was even able to find a few days ago, Oprah announced that she is out of Weight Watchers. She's off the board. She's donating her stock to a charity. So Weight Watchers, while I'm sure it helps some people, she's out. So considering these stocks, Planet Fitness is okay, and the other, it's on the decline, but the other two are just brutal. I will say that none of these are in our models, so I'm not promoting these. I'm not saying that any of our clients hold them, but and who knows, someday we may reconsider. But I wanted to take the other side. Let's look. So if these stocks are taking a rough year, let's see how the fast food stocks are doing. So Steve mentioned Taco Bell, one of my favorites. I remember the good old 59, 79, 99 menu. And let's see here, bring the Taco Bell up on the screen. Yum Brands is what it is. Oh, wow, my chart is not displaying. Let's see if this comes back up. Well, while that's coming up, I'll actually bring up McDonald's because I can see this on my screen. So here's McDonald's stock. Check out this.
Oh,
If
wow.
every time that you bought McDonald's for yourself or your kids, every Happy Meal you threw $1 into McDonald's since the 1980s, you'd be laying on the beach with a six-pack because you wouldn't eat all that food, and you'd be having lots of money. Huge return, you know. So McDonald's doing great. Let me see if I can get Yum to come up here. Okay, Yum Brands. So that's Taco Bell, KFC, and Pizza Hut doing great since the 90s, you know, up to 136. And what I did want to show is the last 3 months. So you can look at the last 3 months where Planet Fitness went down, Taco Bell on the rise. So I think the resolutions are winning out, or they're not winning out, they're giving up. And then lastly, I asked Steve, I said, what's one of your favorite fast food restaurants? And he mentioned Chipotle. And I was not that familiar with this stock. Chipotle trades at a massive $2,687 a share, worth $73 billion in market cap. I had no idea this company was worth this much. And if you look at the trend, obviously since 2011, you know, up 6 or 7-fold. So, you know, overall fitness stocks, you know, Peloton, Weight Watchers crashed and burned, and, you know, Planet Fitness kind of holding steady, and fast food taking off. So I guess this is part of the reason why Monchero and Ozempic and these stocks are probably taking off, because, you know, I don't think fitness is winning out. So that's all I have for now. I'll turn it back over to you, Steve, and you know, enjoy.
Yeah, that's a good overview thing, and probably, you know, sad. You can go ahead and bring your screen down there. The probably sad for the human race, right? That the fast food stocks are winning out over the fitness stocks. But a couple things. So Peloton, if you remember, I googled it real quick. September 23, they had a death. You know, Peloton bike fell on somebody. Of course, that's obviously going to affect your stock. I mean, things do happen, but that's not good when your direct product kills somebody. And then, yeah, I was also Chipotle. If you think about Chipotle, they've had several bad news stories that they've been able to come back with some. They had pork was an issue for a while, but I mean, they came back strong. And I think the strength there is, yes, it's fast food, but it's kind of the healthier version. And then shout out to Jaden, because that's one of his favorite restaurants. But here in Austin, we have a place called Cabo Bob's, which is Chipotle, but better for, even better for you, more delicious. So,
hey, Steve,
all right, yeah, go ahead.
I do want to point out one thing on Planet Fitness that was making me think is, considering the inflation we've experienced in the last few years, one thing that I have not seen go up is the Planet Fitness, you know, $10 per month.
Yeah,
And,
right.
you know, not that I'm the CEO of that company, but I bet you, considering Netflix and Disney, and they've all raised their prices, they probably could raise that from $10 up to $12 and just earn another 20%. I mean, just an idea. And people would probably take that on their credit card and not even think twice about it.
Yeah, well, put your hate comments in the comments when your Planet Fitness bill goes up, because Mike called him out. So, but you're right. I mean, Netflix, you know, put it up $1 or whatever, nobody really complains. Same thing with Starbucks. Seems like every time they raise their prices, you know, it's just like, whatever, it's $1 or $2, right? So good stuff. All right, I want to close with make sure I'm on the right screen here. All right, what do you do? First of all, markets are at all-time highs. Bitcoin is almost hitting its own, you know, it's its own thing, but almost hitting its own high. What do you do when the market hits all-time highs? Well, first of all, smile should go on your face. You should call your advisor, say nice things, because sometimes we don't always hear the nicest things, right? Big hugs, all that stuff. Or just open the statements you haven't been able to check for a while or didn't want to look at, right? But almost everything should be in the green, except if you bought, you know, Peloton at 150 a share. That's not coming back. But so the question is, you know, we're up, you know, do you sell, right? And here's how we do it at the professional level. and in your accounts is you have to ask yourself the question, it's same when the market's down, really, is has the thesis changed or has the thesis played out? So Apple getting hit, markets at new time highs, Apple's down. Is the thesis changed? No, they gave up on the iCar. I would say maybe there's some money moving out of the name because of that. They're moving, the Worldwide Developers Conference every year is in June. They're going to announce their AI initiatives. Like Mike said, they're generally not, a couple days ago, they're not necessarily first to market, but they make what is out there better. So, give some Apple, give them your faith, right? So has the thesis of Apple being the best tech company in the world changed for me? No, it has not. So would I consider selling it high or low? No, I'm sticking with it. Unlike Lilly, I think maybe that thesis has played out. So I would look at peeling back some exposure there. So you're really asking yourself, has the thesis played out? And then making your decisions not in relation to where the markets are at new highs or not. And then the other side of that is, as a whole, do you, I hear people all the time, especially folks that don't work with an advisor, say, well, Steve, I've heard you say, I've listened to you every day, and I heard you say you think the market's going to go up first quarter, probably second quarter, but you're worried about the volatility during the election, and then after that, then I'm just, then it should be smooth sailing once the unknowns of the election become knowns, regardless of how your personal feelings are involved, whether you're happy or depressed, doesn't matter. No unknowns become knowns, and then the markets tend to go higher after that, and they're like, Steve, let's sell now. We've heard, March comes in like a lion, out like a lamb. Let's just sell now, everything, and then we'll get back at it in December or January. And you just don't do that. You just don't. You stick with the plan, your long-term plan, which involves there being a roller coaster along the way, but just stick with it. You may make some trimming. I've talked about buffer, BUFR is a stock that we're probably going to, ETF that we're going to start using in the second quarter to kind of, build in some strength and resilience in your portfolio, if you will. But overall, no, you don't just want to bail in and out of stuff based off of some forecast. You can study markets till the end of time. You can do a PhD on what day and what time of the day is the best time or not to buy a stock or invest or not. And those studies, will give you an answer. It'll say Tuesdays at 9:42 Eastern is the best time. It's irrelevant to what's happening going forward, right? So, you could use all these, thoughts and rules of thumb, but it really doesn't make a difference to what's going on this particular cycle, if you will. And that's why it's difficult, because it's not predictable. Anybody says they can predict it, run the other direction, because they're smart. They're not nearly as smart as they think they are. So really, you don't do anything other than you're happy that the market's when the market hits new highs, other than be happy. Almost everything, your portfolio should be up. Almost everything in the portfolio should be up. But you also want to stick to your goals. So when people ask, hey, should we sell out? It's just like, no, you want to stick to your goals. Like, you haven't given up on your goals, right? Then stick with it, accept the ride. If the market goes down, you're going to reinvest those dividends, or if they spit off into cash, buy some positions while the market's down, and just continue on your lifelong investing journey. That's the secret. We talked about 401k millionaires during the, a couple days ago. That's how you become that, is just sticking to it through the highs and the lows. So be happy that the markets are up, but, I wouldn't be taking any significant action in your portfolios right now. So with that, I want you to say, happy Friday, and thanks for listening in, and we'll be back to you on a Monday. You have a good weekend. Bye.